Welcome to Stock Option Traders. Damn, son, where'd you find this?
What's going on YouTube? Stock option traders here. In this video, we're going to be talking about how to trade FOMC using a strangle. I'm going to show you two different strategies. One is going to be using September FOMC. The other is going to be using November FOMC. Now for the September one, essentially what we're doing is we're buying a strangle as a whole and we're selling a strangle as a whole. All in one full strategy, right? For November, what we're going to do is we're going to buy 10 calls and 10 puts to start. Once FOMC starts, we're going to average the loser and sell the winner. And then we're going to sell the loser once it becomes profitable. And I'll kind of show you how that works. But long story short, every FOMC, as soon as it starts running hard in one direction. And then the Fed speakers start talking, the algos kick in, and it starts running hard the other way. Real quick, so what a strangle is whenever you're buying a call and you're buying a put at the same time. Generally speaking, you do it with the same expiration and you do it at different strikes, right? So if you're doing an at-the-money call, an at-the-money put, in this case, you would have a 383 call and a 384 put. So the reason why you would want to do a strangle, if you look here, you can see that if price moves hard in either direction, the strangle becomes profitable. And so anytime we know that the underlying price is going to move in the upward or downward direction, but we're not entirely sure which, then you can trade a strangle. The downside risk to a strangle is whenever price is just consolidating sideways. Also, if you have an implied volatility crush, so if the implied volatility suddenly starts dropping and going down, that's the other downside risk to a strangle. So you can't really dilly-dally with it. You've got to be quick, and you've got to know when the move is going to happen. All right, so we're looking at SPY here. This is the September FOMC day, September 21st. You can see them throughout most of the day. We had sideways consolidation. We're looking at the 2-minute chart. Right now, we're using on demand, and it is 1:58 p.m., just slightly before FOMC starts. All right, so what we're going to do is we're going to go to all products. We're going to select Strangle. And for this video, we're going to do an at-the-money strangle just to kind of show you how it works. Also, keep in mind, using on-demand it's a little glitchy. So some of these I'm going to use limit orders, some I'll use market orders. We're going to do 10 contracts here. Limit price of 642. Good for the day. It's 10 calls and 10 puts at the money. We're going to send that through. And all right, so you can see here we got filled on 10 contracts each, 10 calls, 10 puts for the 387, 386. FOMC is going to start here in about 2 minutes, September 21st. And I'm going to fast forward and show you kind of how it plays out. All right, so as you can see, we're only about 6 seconds into FOMC, and SPY is just absolutely tanking. And that's what's good about a strangle. It profits either way. All right, so you can see 10 contracts each. One is up 75%, one is down about 53%. This is only 4.5 minutes into FOMC, and you can see it just absolutely tanked. We're up about $470 here. If you like it, we love it. So we're going to go ahead and close this trade out. Going to go to active trader, And like I said, for the purpose of this video, we're just going to do some market orders just to get these to push through real quick. All right, so we're going to close out the calls, the puts rather, and we're going to sell the bid. Got those closed. We're going to click on the calls, sell the bid, close those out as well. Go check on the monitor tab. You can see we're up about 460 on the day. Not bad. All right, this is the November 2nd one. We're looking at SPY 2-minute chart, November 2nd at 13:58. This is 2 minutes before FOMC starts. So instead of trading it as a strangle, we're going to trade this one as 2 singles. And the way we're going to do that is we're going to buy 10 at the money calls. I'm just going to use a market order here, make it quick. We're going to buy 10 at the money puts. Just bump that up to 10. I'm going to bump up the price, get a quick fill, send that through. All right, we're going to press play, fast forward a little bit here. All right, we got filled on both. And I'll explain how this is going to play out. All right, so we're about 4 minutes in here. You can see the calls are up about 70%, puts are down about 64%. This strategy, essentially how it works is we close the calls out. So you close the winner and average the hell out of the loser. So we're gonna close the calls and we're gonna average the puts down on the next screen here. All right, it is now 14:28. It's about 2 minutes before J-Powell starts talking. So how FOMC usually works, it'll run hard in one direction, and as soon as J-Powell starts talking, it'll take off in the other direction, just a big fake out. So we're going to get these averaged down here and get prepped for the next move. You can see that we've got 40 calls now, and we're ready to run the other direction. All right, you can see here it just took off running in the other direction. And so now both the calls and the puts have become profitable. We're going to go ahead and close the puts out. Keep in mind, this second strategy that I just showed you using November, there's a lot more risk involved, right? Because of the fact that we're averaging one side down. The safer way to do it is to just close the entire strangle as a whole. Although, generally speaking, this is kind of how I've noticed the FOMC is played out every time. I've done quite a bit of back testing. It'll either go up or it'll go down, and then once the Fed talk happens, it runs the other direction. But you can see we're up about 4,000 on the day here. Not bad. See, it ran up, consolidated, he talked, algos kicked in. Easy money, right? Thanks for watching. If you enjoyed this video, then don't forget to like, comment, and subscribe to the channel, and check out our Discord, link down below.